Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 22nd. My name's Eric Wilkinson. Some of you may recognize me from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but I did tweet out something earlier this morning. You can get me at Wolfman's blog on Twitter, that Iraq, which is the second largest oil producer in OPEC, said that they were going to increase their exports by 5% in just the next couple of days. So that has been negative for crude oil, despite the fact that there's already a glut of oil out there. Crude oil sees that, plus oil rig counts was up by 10 going in on Friday. It was after the close I saw that happening. So oil rig counts going up, Iraq deciding that they're going to increase their exports, all of those things negative to crude oil, and it is down over almost $1.50 on the day. So pretty negative news coming out for the bulls in crude oil /CL, as you can see here on the chart. And gold right now, gold's really still stuck in that range. I told you it's really liking this whole $1,355 area. That's going to be really the line in the sand where there's real complacency, and it broke down below what I would say would be the support of right around in here earlier today, but has bounced right back, only down $2.40 on the day. The bonds cruising higher. There's been a lot of fluctuation in the equities, but bonds are just strong today, up over a point on the day, trading at 172 and 12 ticks. So that's /ZB. Then the NASDAQ, we've got a mixed bag here with the equities. NASDAQ is up 2 points on the day, 2.5 points, but has had quite a bit of gyration in the markets, just not a whole lot of volume. E-mini S&P is just pushing positive, back into the positive area, up 1/4 of a tick. Here is the chart of the E-mini S&Ps on a 15-minute chart. As you can see, we can really blast higher here on the chart, unchanged on the day, but from the open, slammed down, rallied right back, slammed down again. It's like we're having some pretty wild ranges of about 6-7 points, sometimes 10 points within a 15-minute bar. So pretty volatile market on some pretty decent volume for a Monday. On to the things that I've done or let happen, I guess you could say. Lululemon was a trade that I just let expire, and I had on the August 70 puts that I had bought for 65 cents. I let those expire. I still have on that September 70, 87.5 strangle that I put on there. Now we do have earnings coming up, as you can see, on I think it's September 1st. Anyway, I'm going to try and cover that before then, unless we get right back into the middle there, and then I might just let that trade go out through the earnings trade, as long as I'm outside that market maker move. Adobe is another trade that I let expire. Again, bought some puts in there, and I had bought the August 95 puts for $1.32 and let those expire. I haven't done anything more with those, but those were some things that I was doing to try and take advantage of low volatility, thinking if we got a sell-off here, we'd get some volatility expansion. That hasn't happened, and so I let those expire. On to Deere. Deere is a trade that, if you remember, I had on as an earnings trade and covered that relatively at good prices, but the volatility in there isn't very great, but at the end of the day, I'm getting tired of doing debit spreads. It, to me, feels like those are losing propositions. So I bent one of my rules and went with a strategy that doesn't have really high implied volatility. As you could see earlier on in the year, we had some pretty decent volatility in there, but since then it has waned a little bit. So I kind of did the math on it, and it's closer to the low end, maybe 15-20% IV if we just take out those earlier spikes. But I was still able to get some good premium and get pretty far away from the at the money because of the big volatility move that or the big move we saw in the underlying on that earnings. So I'm about $5 wide on that. So I thought that was a pretty decent premium for $1, and did the September 82.5, 92 strangle in there for collecting a 94-cent credit. So I collected almost $1 for that strategy with $5 wide wings. Seemed like a pretty good strategy to implement with $5 wide. It's probably going to settle down here for the foreseeable future. Maybe sell off a little bit as people take some profits, but looks like a pretty good trade in that regard. So that's about all I got for you guys today. On to Friday, we got a webinar. We're going to be trying to take advantage of some of this low implied volatility, and we're going to be doing it on the long call spreads, and that'll be a really good one. I'll talk about all my rules in regards to how to set that up to get a higher probability of success with a debit spread. You can go to protraderstrategies.com, sign up for that. The more the merrier. That's all I got for you today. If you can't take that, take it easy.